Celebrating welcome to the 100-Year Real Estate Investor. We're your host, Jake and Gino, and this is the show dedicated to personal financial engineering. Gino, how's it going?
Doing good today, Jake. How you doing?
Always making it happen, big man. Hey, we often joke, Gino, about our baby money soldiers and how it's important to treat your personal finances with extreme disciplined behaviors. So this goes for expenditures, it goes for investments, it goes for growing the money. Every dollar should have a clear role or responsibility, and it's up to you to ensure this happens. Now, the cool thing about money, it doesn't care how smart you are. Money, at the end of the day, responds to the proper money-related behaviors, not a fancy finance degree. Doesn't care if you're the prom queen, high school quarterback. Money, Gino, as you know, is going to reward those who demonstrate the right behaviors over a long period of time. So, Gino, get an update for us on baby money soldiers for 2023 and some other happenings. How you doing, sir?
I'm doing good, Jake. And when you glossed over baby money soldiers, just give that definition again, because you do it so eloquently. And let's talk about, paint the picture.
Okay, let me talk about baby money soldiers, Gino, because you know I love it. So we like to compare it to the game of Risk, okay, because we're real estate guys and we're going to take over territories. And the beautiful thing is that you, especially early on, you want a lot of mercenaries going out to kill. You want these baby money soldiers of war, okay? Think Ragnar Ragnarsson, face paint, hatchets, bloodthirsty killers, okay? They take over a property. It's your first multifamily investment, right? But the cool thing is these savage Vikings, they hump a lot and they have a lot of babies, okay? So they procreate, and now they took over the property. And how do they make babies, Gino? They get tax benefits, okay? They get cash on cash returns. They get refis, okay? So now Ragnar Ragnarsson has a bunch of little Ragnars running out, and they go to Iceland and they take that over, which is their second property, right? And they keep repeating the cycle, and we have jobs for these, okay? And then they go into savings, and then they gear up the reserve troops, okay? So this is this game of Risk that we call baby money soldiers that is really assigning accountability and roles to each one of your BMSs, your baby money soldiers. Hey, I perked up a little bit there, huh?
I told you I'd make you smile today. And the reason why I wanted you to really go into that, because there's so many different functions for the baby money soldiers. Some of your baby money soldiers are going to be spent for living expenses. You got to pay the rent. You got to, pay for your car. Some of them are for luxuries. Well, let me go out and buy the Rolex. Well, you're killing your baby money soldiers. Oh. The idea, especially early on, is try to limit those wants and use your baby money soldiers more for the needs and grow it up. Because what you want to do is you want to create a snowball. You want to create a lot of mini Ragnars, as Jake said, and bring those out. But what most people really miss when they're personally financially engineering their plan is they send all the baby money soldiers out to conquer. You need to know early on, and this is the big mistake that I had back in 2008 and 2009. I didn't have a lot of BMSs in reserve. And that's why I love whole life. That's why, the 100-year real estate investor, we talk a lot about whole life insurance. It's a cash management strategy. You can't have every single one of your dollars out to risk. Not the game of Risk, but put at risk. Because what happens is when you're running your businesses and times get a little tough or you can't make payroll, you need to have money in reserve. What's going to happen now in the next 12 to 18 months? Deals are coming online. If I don't have any money in reserve, I won't be able to take those opportunities. Also, when you're in multifamily, we have something called CapEx reserves. If something happens where a roof gets flown away by a storm, or you've got a hot water heater or something, you need to have money in reserves. So understanding how to utilize the baby money soldiers, we break it down into these percentages. At least 10% of your baby money soldiers, Jake would probably say 80% because that's where he is right now, but at least 10% of those baby money soldiers need to put away to be able to save to buy an asset. 50% is for necessities. 10%, I would say, give them to charity. 10% on education, and I got 10% for luxuries. Now, if you can limit yourself, put more of the 10% of luxuries up onto the financial freedom account, or where you're actually saving to invest. And I think people, when you use a framework, we like to work with frameworks. That's what we like to do. We like to see where we can allocate our resources. And like Jake said, over the long term, if you're able to allocate resources, defer gratification, invest in assets that create more baby money soldiers, that can be invested into more assets that create more baby money soldiers, all of a sudden, those assets are creating a lot of baby money soldiers where you can live off of. those baby money soldiers and reinvest some and use some of those to buy your luxuries. You don't want to kill the baby money soldiers early on in your journey, buying luxuries and not investing those to procreate and to go out to create more.
It's like I said early on, it's not your intelligence. Okay. It's not understanding interest rates. It's not understanding derivatives. It's your behaviors. And it's easier said than done. And are you actually tracking it? Do you know? I'm sure 99.9% of people listening to this right now have no idea how much they're spending every month on luxuries, how much you're spending on food. Guys, if you actually track this stuff and know how much is going to reinvestment and growing baby money soldiers, especially before you're really, really rich, okay? Before you're really, really rich, you need to know the allocation. And if there's a higher allocation going to reinvestment, that's a behavior, that's a trait that's going to lead to prosperity and wealth.
Jake,
it's very simple.
You had asked me, why are we doing the show today? And for me, it was really clear. I'm jogging last night in my neighborhood. Beautiful out, 65 degrees. I got my watch. I'm doing about 128 beats per minute. I'm actually listening.
That was a Rolex?
No, it wasn't a Rolex. It was a Polar. It was a heart monitor, bro. And I'm listening, got my headphones on. I was actually listening to a podcast about Romans and gladiators and how the
so you were ready for this.
Dude, I'm just running, right? And for some reason, it just popped up on YouTube, and it's just amazing how the Roman centurions, how that they were all structured. It's all about, even them, it was about frameworks and about creating discipline and about thinking for the long term. Talk about thinking for the long term. They conquer a territory, add infrastructure, tax the people, and go to the next one. But anyway, as I'm jogging, someone riding a bike comes by, and by the way, guy's name is Corey. Jake and Gino guy loves the podcast. He's a neighbor of mine. He spends 2 weeks a month in Minnesota and 2 weeks in Sea Colony where I live. He's got this electric bike, Jake. This thing is unbelievable. This is probably worth more than my first car. It was just amazing when he was riding. So I look over, I'm like, hey.
Like a crotch rocket?
No, it's like this electric bike. I think it's awesome.
Like a bicycle?
Yeah, bicycle. Yeah, regular bicycle.
I think that defeats the purpose.
Dude, it was awesome. I mean, I think I got to pick myself one up. But I look
over. Did it have ground
effects
effects and like lights and shit on it, or what?
Yeah, nice lights. I mean, I think it looked awesome, bro. And I said, how are things going? And I didn't know Corey had 150 units. And on top of that, Corey is a sophisticated investor. He's also a financial planner. And it seems as if he's been doing this since 1998. And he seems as if he's sort of transitioning into real estate almost full-time-ish now, whereas financial planning is more of his, what we call a side hustle. The real estate was the side hustle. Now the real estate's the main hustle. But the reason why I'm telling you this story is we're talking about the markets and last year. And he's like, yeah, my real estate got 13%. I'm like, yeah, plus all the tax benefits. He's like, yeah, my stock portfolio was down or was negative. I'm like, that's the problem. I think everyone looks at it from year to year. And if you can think about just buying assets and looking at that whole life as that savings vehicle, putting money in the savings vehicle, and we love to invest in real estate. We love to invest in those type of assets that are going to produce cash flow for us, that are going to produce the dividend. I don't want to have the roller coaster of
It's
stocks.
Coastal investing for the real estate folks out there. The stock market is coastal investing, buying fix and flips. Okay. You're going to ride the roller coaster. You're going to have ups. You're going to have downs. I don't want that. I want consistency and growth over time.
Do you think you're building true wealth by investing in the stock market? I mean, financial planners love that. People who are fee-based want you to put money into stocks. But I mean, honestly, out of 100 people, how many people do you think got wealthy from investing in stocks? And how many people do you think got wealthy investing in real estate? And how many people got wealthy investing in business?
There's so much luck involved in it too, because like really you want to buy stocks, that you hold on to for the long term in companies that you really believe in, right?
So hard to do that, though.
But those companies come and go. Like if you look at the companies in the Fortune 500 in the last 30 years, how many are still there? And how do you pick the winners, right? Like I'm not smart enough to do that. I don't know where the CEOs are going to go, right? And look at the social shifts, right? In terms of, these companies, you think they're there to, take care of the investors and make sure that they're there just to, provide services for the customer. But now there's like these social initiatives that could undermine the complete value of the organization. And that's becoming truer and truer. So dude, I'm not putting my money out there. That is gambling.
It's interesting you say that because there's some groups out there that actually want to start suing Disney. I mean, Disney's down 50% as we speak.
I didn't say Disney.
Oh, I'm saying Disney. Netflix is down 40%. I mean, a lot of these companies are down huge, and these are like stellar companies that have been around. Netflix
Did you just say go woke and go broke?
I didn't say that. You're saying that. You're putting words in my mouth. Stop doing that. But that's the problem. Like, you have no control over the company, and you would think that a brand like Disney would be insulated from these downturns, and that they on the
you'd think, dude, Disney was like the slam dunk.
They're not. And it's all about investing in new technologies. In multifamily, you buy a 10 unit, you fix it up, you raise the rents, blah. Not really rocket science, everybody out there. But that's important.
And people need a place to live, okay? They don't need Disney Plus. Amazon's got it. Netflix has got it. There's 15 more that got it.
And let me ask you a question.
A lot of kid shows out there.
How many are you on there, bro? I got like Hulu. I've got Prime. I've got Roku. What the hell is Roku? I got Roku going on. I got so many of these different services. Disney Plus. I'm getting rid of Disney Plus. I want to get Netflix too.
We don't have Disney Plus. The kids, the little guy watches Melon. And it seems okay. I sit there and watch it. It kind of puts me to trance, and I'm a little concerned with it, but it seems like it's okay. Like Melon.
I eat melon, Jake. I'm not watching melon. I'll eat some melon, but I ain't watching melon. Anyway, we're going off the rails here. So, how to use the baby money soldiers. This is the important part, because I think most people don't have the framework on how to use them. I think the first thing, which actually changed my mindset completely and forever, you save your baby money soldiers in the bank, or even much better, in a whole life policy, to invest and buy an asset. Don't save that money to go out and you're going to save for retirement, or save for college, or save for a kid's wedding. That's on my mind now recently, right? You're not doing that. What you're doing is you're saving to buy an asset. That asset creates the baby money soldiers. Those baby money soldiers will pay for that event, right? And on top of that, if you're saving for that event, what happens when that event is over? Your baby money soldiers are dead. But the way I'm telling you to do it is you're buying that asset. When that event is over, you still have the asset, and that asset still continue to create more baby money soldiers. Number two, Mr. Stenzi, control your expenses. There's no way around it. Doesn't matter how much you make. I was in New York City this past weekend. I know people making 7 figures up there and are still working paycheck to paycheck. If you're making more money and you're spending more than you're making, you're never going to win the game of money. Number three, redeploy your baby money soldiers to take over more territories. Don't stop at Iceland. Go to Greenland. Go to Newfoundland. Continue to buy and redeploy them out there. Number four, assemble them in reserve. As you make more, you're going to pull some back and say, you guys, you got to stay here. I don't want you to get into battle, because I may need you.
You're going to grow, but a little bit slower.
Yes, exactly. And avoid losing a battle. If you've got a stock and it's losing money, don't kill those baby money soldiers. Sell it, take a loss.
This is such Viking talk, because that was the same way the Vikings fought. Like, they were calculating how many guys were going to lose here. They were very concerned with that.
Well, think about what stocks. Yeah. I mean, like the first Warren Buffett says, first rule is don't lose money. Second, look at the first rule. If you're out there losing money and you're just saying to yourself, I don't feel really good about this investment, cut your losses. And it's the same thing with a real estate investment. If you've made a mistake, and you know you've made the mistake, and it's not in your long-term plans, you bought a single-family home, it's not in a great market's turning, you're like, I'm not getting my money back for another 10 years. Take the losses. Try to preserve some of those baby money soldiers to be able to redeploy them to go out and fight another day.
That's right.
Whew. The next one, reinvest into your education. I think this is one of the most underutilized and most important ones. How are you going to create more baby money soldiers? By being able to grow and learn different techniques and different strategies. And it's about personal development, and it's about human development. If you're not developing yourself personally, then what happens? You're not going to be able to grow your base of baby money soldiers. You're only going to be able to utilize them in one or two fashions. You want to be able to continue to grow. And the last one, only invest your baby money soldiers with other people who have similar goals and similar ideals as you with the baby money soldier game.
I love it. Whenever we can talk about Vikings, Gino. And gang, as always, we believe in buying deals for the long term. Think of decades. I'm Jake. He's the G Daddy. We make it happen. We'll see you next time.